Hello, everybody. Good evening. Welcome to tonight's webinar. My name is William. I'm your host tonight. So before we start, I would like to do a sound check. If you can hear me, please tick yes in the poll. Okay, I see a very good response. Okay, thank you. So here's a little disclaimer for whatever we share tonight is just for general information and educational purposes. So it does not constitute to any recommendation to buy or sell any investment products. Here's a little background about our company. So our company is called Phillip Capital Sdn Bhd. We are incorporated in the year 1995. So our company has been around for close to 30 years. And we are only owned subsidiary of the Phillip Capital Holdings Sdn Bhd. And some of you may know we were formerly known as Phillip Futures, but as we grew and expanded our services and offerings, we have since renamed ourselves as Phillip Capital. Apart from that, we are also trading participants of Bursa Malaysia Derivative, participant organization of Bursa Malaysia Securities, Berhad, and also a holder of the Capital Market Services license. So that basically means that we are legal and regulated broker in Malaysia. Here's our office. Phillip Capital have office across Malaysia. Our mother company is actually from Singapore, but our HQ is based in Kuala Lumpur. And we have total of 11 branches across both the East and West Malaysia. So if you are from any of the cities, you are welcome to drop by our branches and inquire about investment related services. This slide shows that the Bursa Excellent Awards that we received for the past few years. And last year, we were also very honored to be awarded as the first runner-up for the best retail derivative trading participant, as well as the second runner-up for the best overall derivative trading participant. So Phillip Capital has a wide global network. We have office in 15 different countries as located here in the map. As such, we also do serve an international client base. And for futures trading, we also provide products listed in global exchanges from the US, like the popular exchange, like CME and then CBOT, COMEX, and NYMEX. We also have exchange from Europe, Japan, Hong Kong, Singapore, and also Malaysia. With our global coverage, clients can trade both local and foreign products within the same platform. So here comes our products. We mainly offering three categories. The first one is futures, which includes diverse markets like the index futures, and then agricultural, metal, energy, and interest rate futures. The next one is stocks. You can trade Malaysia, US, Hong Kong, Singapore, and Australian shares with us. And the third one is contract for difference, which is known as CFD. We offer local Bursa shares and also US shares CFDs. If you want to trade the US indexes itself, like the Dow Jones and then S&P 500 and also NASDAQ, we also offer the CFD at a very attractive rate. You're welcome. If you are someone who likes to take advantage when the market is going down, so the derivative products such as the futures and CFDs are a great choice because you can short the market and potentially still make a profit. It means you can trade both ways, whether if market goes up or down, you are also able to trade with margin and leverage, meaning that your capital upfront is a lot lesser. But if you are more of an investor or your plan is to invest for the long term, then surely stocks are suitable for you to explore. Our rates for the foreign market are also very competitive. If you are interested, to let us know, and our staff will be more than happy to contact you. So why choose us as your broker? So Phillip Capital is an award-winning broker and well established in the market already. We also offer 24 hours broking and execution support If you have issues regarding your trades and account, you can call in our dealing desk and we will have dealers ready to assist you. Next, we also provide advisory services on what products you would like to trade or how you can get started. And we do send out the latest market news to our clients on the daily basis. So you can be sure to get the latest updates. And as mentioned earlier, our clients can trade numerous products through our platform. And lastly, we have an online account opening, which will make it easy for you to start as well. Apart from the above, we also provide free one-to-one coaching session now. If you like a more personalized coaching on futures trading, for example, on how to use a platform, we can always arrange appointments to guide you. We do also frequently conduct free seminars and webinars, and you can also start trading by opening the account for free. So for these coaching sessions, it's more customized to beginners who need some guidance on these topics, like how to start trading, about our product knowledge and platform, and our charting system. If you are interested, we are happy to assist you as well. So Phillip Capital, we also constantly provide educational resources for investors. You can check out our upcoming seminars and webinar by scanning this QR code, or you can also visit our website at phillip.com.my to check out on our schedule. We invite speakers from the industry to give market updates and insights. So it is a good learning opportunity, I would say. So do join us for our events. We also conduct this weekly market call, so you can join our research team on the market views and updates for newly published reports every Monday at 11:15 a.m. If you want to learn more on technical analysis, like how to spot the entry or exits, then this is for you. Our analysts will do the technical analysis on live counters on every Monday night at 8 p.m. Monday night at 8 p.m. Next, we have this online account opening. You can open your accounts for futures, stocks, and CFD with convenience that you don't actually have to drop by our branch. You may just do it online in the comfort of your own home. If you want to open an account with us, you can take a screenshot or scan the QR code right here, and it will take you directly to the online application. Moving on. So this is about our trading platforms on how it looks like. Sorry. The platform that we use, this is the platform that we use for futures trading. It's called Phillip Nova. So it's very simple to use. We have mobile app for both the iOS and Android devices. For those who like to trade on the go with your handphone, our platform has wide range of technical indicators, live charts, market depth functions, and you can get access to both the local and foreign products. If you are not our client yet and want to try out our platform to see the interface, we do have a demo account for you to try out. You may scan on this QR code as well. So this is our stock trading platform. The platform that we use is called Points Global 2.0. Our platforms offer all-in-one stocks watch list, charting indicators, and exchange top 30 movers. And we have stock analytics as well, and the market depth. So this platform is suitable for both new and experienced investors. Next, this platform is the platform that we use for CFD is called Phillip CFD Trader. Our interface is very user-friendly, and it also has live chart, price alert, and then we have live market price as well, and different order types. So this one is for our current promotion. So we are currently running a few promotions. The first one, this one is called Trade and Earn with Phillip. So you can stand a chance to win good prizes like iPad, AirPod, Apple Watch, and also up to 1,800 ringgit of the Touch and Go relock pin when you start trading any products with us. That includes either the futures and then the stocks or CFD. Whereby the more you trade, the chances of you winning the rewards are also higher. So this promotion will run until the end of this year, so it's still a good time to start now. So this last promotion is our US index CFD. So right now you actually can trade the US indices CFD with us at only USD $2 per contract. You may scan the QR code here to get more info as well. Okay, so tonight before the Dr. Sathia section begins, we would like to first invite Susan from Busan, Malaysia to introduce on this futures trading apprenticeship program. So Miss Susan, are you ready?
Hello, William. Thanks.
Okay, I have changed the presenter to you. You may show your slides. Okay, we can see it. Okay, thank you, Susan.
Okay, good evening, everyone. Thank you. Thank you for joining. I'm very happy to be here to talk about some updates from Bursa Malaysia derivatives. So in this sharing, I will cover from this pricing to the trading, the trading situation, the volume and the open interest. And then we'll talk about the participation of the market of the BMD. Okay, so let's start with this pricing. Looking at this, because this is the FCPO price since September 2021. We are using this chart to compare the MPOB, Malaysia Palm Oil Board, daily prices and the spot month FCPO prices. The FCPO is the crude palm oil futures contract, and here we are using the spot month. So MPOB daily price is a reference price for the palm oil, the crude palm oil in Malaysia. So let's see how similar, how does the price correlates with each other for these two reference. We can see that this blue line is the MPOB daily price, and the red line is the FCPO spot month price, and they are almost the same. So we have calculated this correlation, means how much it moves together. The correlation is actually more than 90%, which is very high. So this is a very good reference for the FCPO is a very good reference for these crude palm oil prices. And this is the next slide. Actually, this is the MPOB daily price, means the spot CPO price, compared with the third month FCPO prices. We are using the third month because it is the most active month of the FCPO contract. Why is the third month most active? It is because this FCPO contract is physically delivered. Meaning, if you call the contract until spot month, means the delivery month, you actually have to deliver this crude palm oil to the pot tank installation, or you have to receive the crude palm oil if you are a holder of the long position. So usually when people want to trade this contract and purely on trading, people will choose to trade third month and onwards. So third month is a good reference for the trading environment for this the crude palm oil. We can see that again the blue color line is the MPOB daily price. The red color line here represents the third month FCPO price. Again, there are some difference because this is third month contract, means not on the not same month delivery. It is the third month. It has some difference with the spot prices, But again, when we calculate the correlation coefficient, it is 97%. So the third month is also a very good proxy for the price movement of crude palm oil. So it is very suitable for trading. Besides that, using the FCPO contract, we can see prices of contract months for more than a year. This is showing the term structure of FCPO. An introduction to the term structure. It is a chart that shows on a particular date what is the price for different contract month. Example, let's use the first one, the one on the top left as an example. The date here is 13 January. And at the horizontal axis, it is the contract month. The one means spot month, second means second month, third means third month. And the vertical axis is the price in ringgit per metric ton. So it shows what is the price for each contract month. And then we can analyze the pattern. So we can see the term structure of FCPO has been changing throughout the years. Sometimes this spot month is trading at a much higher price than the further months. Example, we can look at the one on the top middle on the 24th of March. You can see that on this date, these near month contracts, spot month, second month, and third month, the price is much higher than the one and the later contracts. It can be due to many reasons. Maybe there is a tight supply or the price is steep. So from this chart, from the term structure, and you can observe the supply and demand of the CPO. Let us talk about the volatility by using the average true range. Again, we are using the FCPO third month because it is the most actively traded contract month. We can see that these prices have been fluctuating in a very volatile situation in year 2022. This is where the price hit 7,000 level and go back to 4,000 level. And we can look at the red line here. The red line is the average true range. So what does the average true range do? It is a measure of how wide the range of fluctuation of the price in a day. So we can see that when the price is very volatile, means one day the price fluctuation can be very high. You can see that the highest is around April to May, where the red line is at its highest. The fluctuation for the one day price fluctuation can go up to 400 ringgit. And until now, the fluctuation is not that big anymore. The average fluctuation is around 100 and 120 ringgit per day. So we can see that when the prices are high and it moves very fast, the volatility is high, and we can analyze the volatility by using the average true range. Okay, this is about the price, the daily trading volume and the open interest. The orange color line here shows the price of the FCPO for reference. Everything in blue here shows the volume and open interest. So currently, year to date in this year, the average daily volume is 61,630 contracts. And the open interest means the people who are holding open positions overnight is currently about 200,000. Let us talk about the trading sessions and see when the traders come in and trade the FCPO. So this chart is showing an average 30 minutes volume of FCPO, which is an average across 6 months to come out this chart. So during the morning session, we can look at the most right-hand side of this chart, the morning session at 10:30. You can see that at 10:30, when market opens, 10:30 to 11, it is where the highest trading volume is. So people, when the market opens, immediately people rush in and price in. And then afterwards, the volume slowly goes down. And moving to the afternoon session, when the market opens again in the afternoon at 2:30, people come in and trade again. And before market close, before 6 p.m. market close, we can look at the 5:30. We can look at the 5:30 bar here. And people also like to trade, maybe close position or maybe do a last minute trading. People also come in and trade before the market open. And after that, look at the after hour T+1 session. It's actually a night trading session. The night trading session the volume has actually improved, meaning the night trading more and more traders would like to trade during the night trading session, because this is where the US market is active. So some traders will come in and trade, and also there's a chance to compare the FCPO price and the soybean oil price, and maybe you can capture an arbitrage opportunity at the night trading hours. This is the volume of these night trading hours since January. We can see there's a good improvement of the night trading volume. This is showing the volume of night hours. Now let's talk about the market demographic. Who is trading the FCPO contract? You can see that 56% of the trades came from foreign institutions. This also means FCPO is widely accepted globally, and it is used as the global benchmark for crude palm oil prices. And we have a domestic retail and domestic institution. The locals also means the locals are the registered professionals trading for a living. So it also consists 8%. This is to highlight that a lot of trades come from foreign institutions. Here are other developments of this of the BMB. We have rolled out a few infrastructures to help with this. We have rolled a few infrastructure as well as products for the market. First, it is the alternative delivery procedure, ADP. It is a very good infrastructure for the palm oil physical players when they want to do physical delivery via the crude palm oil futures. So with this ADP function, the buyer and seller who knows each other can actually take the physical delivery of the exchange. Means they can negotiate privately and deliver off the exchange. While if they don't opt for this procedure, they may go with the normal physical delivery process, which is defined with the rules and the process are defined by the exchange. So this is an alternative method for the physical players to deliver. And also we have launched the people contract, is Malaysia CPO futures. This contract, the delivery points are at Sabah and Sarawak, Lahadatu, Sandakan, and Bintulu. This is for traders to price in the CPO in East Malaysia, because the FCPO delivery port are all in Peninsula. So this is the contract for the East Malaysia market. Also, we have the VDA, voluntary delivery acceptance, meaning, but this is only for the East Malaysia contract. The physical players of the crude palm oil can opt for a VDA to be given a priority for the allocations of delivery procedure. Means when they want to, when they are waiting for the tender, they can opt for this VDA. So they will be given priority when it comes to the tender. Also, we launched the inter-commodity spreads between FCPO and FEPO, because they are both crude palm oil contracts, one in the peninsula, one represents the East Malaysia crude palm oil pricing. So this function, the spreads function, allows a spread trading execution between both contracts on a 1-to-1 ratio, means one FCPO and one FEPO with click of a button. So traders can effectively capture the arbitrage opportunity between these two contracts. And coming up, we are also going to roll out this FCNH, which is our first currency contract. It is the mini USD and Chinese renminbi futures contract, which is licensed from Hong Kong Futures Exchange. Also, coming soon, we'll have the soybean oil futures that is licensed from Dalian Commodity Exchange. So these are the two exciting products that will be rolled out in the near future. Okay, this is the end of my presentation. I'll pass the floor back to William. Thank you.
Okay, so thank you, Susan, for the insightful sharing for this FCPO. So we actually have some questions shooting in, but then we will have to put this Q&A to the later session of this webinar due to time constraint. So later we will try to pick few questions for the speakers to answer. So Miss Susan, maybe we have questions for you later. So as of now, we will have to pass this floor to Mr. Sathia. So Dr. Sathia, are you ready? Before that, I will.
Yes, I'm ready.
Okay. Just give me a minute. Okay. So now is Dr. Sathia's section. So Dr. Sathia is the co-founder of Palm Oil Analytics, an online publisher of palm oil daily news, price data and analysis based in Singapore, serving the global commodity markets. So this year, he was appointed as advisor to the MPOB Techno Economics Research Committee. So Dr. Sathia, I will now pass it to you. Or you may able to show your slides. Hold on.
Okay.
Okay.
Okay, can you see my screen?
Yes, we can.
Okay, excellent. Very good. Okay, you can see my screen, right? Okay, very good. Good evening, everybody from Singapore, and good morning, good afternoon, wherever you're joining from. So thank you very much for making time to join this presentation organized very kindly by Phillip Capital for the customers and learners, for the people in the industry, the market on a Friday night. I'll be very quick in my presentation. Palm Oil Analytics is a publisher of palm oil price news and data. On the top right of the slide, you can see my contact details, so feel free to get in touch with me, ask me any questions, WhatsApp, email, WeChat, Twitter, LinkedIn, and so on. Okay. So I'm going to be basically be covering in another half an hour or so overview of the palm market. So just giving a very quick snapshot, about 5 slides on what is the global palm oil market like, big producers, big users. Secondly, pricing fundamentals. Okay, we talk a lot about pricing, and I know a lot of the members of the audience taking part are daily traders who hold very short-term position of the FCPO. So what are the main factors, variables that you need to look out for on a day-to-day basis? Thirdly, main factors to watch out for daily pricing, and followed by factors for the long-term pricing that we think will happen in 2024, covering production, exports, and other main factors that will see significant increase in the uptake of CPO. So that's quite supportive of prices. Then finally, a conclusion. So overview of the palm market. So the palm market, you can see very clearly, Indonesia is a gigantic producer, commanding about 60% of the global palm oil production in the world, followed by Malaysia, a distant second, and thirdly, Thailand. So together, Indonesia, Malaysia, and Thailand, ASEAN members command about nearly 90% of the global CPO production. If you like, Indonesia and Malaysia are the leading producer, and the others are tiny, small producers. So it's a bit like a duopoly market structure when it comes to production. Other market structures of duopoly are like Boeing and Airbus, Coca-Cola and Pepsi. So that's just kind of example of two big producers commanding big share of the market. Next to it is the exporters. You can see Indonesia continue to dominate with 55% of the global CPO exports, followed by Malaysia, nearly 17 million tons. The big difference here is that Indonesia has a very large domestic market, yet they are the biggest producer. Whereas in the case of Malaysia, Malaysian domestic market is small, about 30 million people. So most of the production from Malaysia is exported, as you can see in the next slides that I will show you. Over the years, this chart shows you the production of palm from 2000 to 2023 estimate number. Malaysia was the biggest producer in the year 2000 and before that. But in 2009, Indonesia overtook Malaysia as the largest producer because of expansion of new planted areas in Sumatra and in Kalimantan, investment from private capital, more oil palm plantation listed on the stock exchange, in Singapore Exchange, in Jakarta Futures Exchange. So these gave a lot of capital for oil palm plantations to expand their land bank and subsequently increase their planted area and harvest area. We had a slight dip in the year 2016 with the impact of El Nino in both the countries. And Malaysia has not really fully recovered from that El Nino, as you can see from the blue chart there. Production has been mainly flat over the last 20 years. And this could be low yields, shortage of workers, reduced oil palm planted areas, and increasing demand for certification and sustainability standards. Oil palm plantation looks like this. As you can see, top left-hand picture, you may have seen already, but I just want to show you rows of trees here. This is a very tall tree which requires either mechanical harvesting or motorized harvesting sickle. So harvesting is the main job that's done by the foreign laborers in Malaysia. Fresh fruit bunches here, FFB, which is ready, ripe for harvesting, and cross-section of the oil palm fruit. Palm oil users, Indonesia is the biggest user, as I described earlier, because of the large domestic market, and also because Indonesia has a biodiesel mandate of B35, which is mainly used by the road transport vehicle. Second largest user is India, about 22% of the global palm oil imports, followed by China at 14%. Palm oil use is mainly in the edible food sector. You may have heard of RBD palm oil, refined bleached deodorized palm oil, and you can see in any supermarkets, as the picture on the bottom left shows, packages of cooking oil, whether in plastic bottles or glass bottles, sold widely in the supermarkets around the world. And most oils are somewhat blended as opposed to single pure vegetable oil. 24% is used in the oleochemical sectors. This is for makeups, body creams, hand sanitizer, but also in home care products like floor cleaning, detergents, liquids, and so on. And 5%, but increasing year by year, is the use of palm in biodiesel, mainly based on the mandates given by the governments in Brazil, Argentina, EU, and Indonesia. Okay, summary. This is just a summary. You can read this at your own time. Pricing fundamentals. So I just want to touch I don't want to repeat too much of what Susan said earlier. So CPO market is a futures market. What does it mean? It means CPO futures market is a futures market. It means it's a standardized legal contract between buyer and seller with a clear price, delivery date, and product specification. And these contracts are legally bound, and you can either buy forward, that means you can go into this Bursa Malaysia using Flip Capital as your broker and buy CPO futures for January 2024 or August 2024. So you can buy well ahead if you want. So a CPO futures derivative market allows risk to be moved between the people who want the risk seekers, and the people who want to avoid the risk averse. Okay, so that's basically what Bursa Malaysia CPO futures contract offers: movement or exchange of risk. There are many other futures market, not just CPO. Sugar is also traded like that. Coffee is also traded like that. Rubber on Tokyo Commodity Exchange. Soya complex, that means soya beans, soya bean oil, soya meal, are also traded on the futures market on the Chicago Board of Trade. Crude oil, of course, is the biggest, most largely traded futures contract. But there are also products which is traded on cash basis. Cash means you go to a supermarket, you take a loaf of bread, you go to the counter, you pay the price. You get the goods, you pay the price. That's it, cash market. So products like iron ore, bananas, eggs, and many others, you can put many products that comes to your mind are traded based on a bilateral buyer, seller, agree a price and make a deal. So there is no futures market price discovery for bananas, for eggs, for chicken wings, and so on. Okay, so there are many exchanges for agriculture product, not just Bursa Malaysia. You can see here, I boxed 1, 2, 3, 4, 5, top 5. Dalian, Zhengzhou Commodity Exchange, which trades rapeseed oil, CME Group, soya complex mainly, but also wheat. ICE Futures, which trades coffee, cocoa, and sugar. And MIEX is the Miami Exchange, which has wheat, which is traded on there. So these are just some exchanges that you want to just take note. Right, so I want to talk about palm market pricing data. So because it's a futures market has different parts, fundamentals, substitute, and so on. So pricing is based on many things. So I'm just going to talk about fundamentals. When we say fundamentals, what we mean supply and demand analysis. What are the related oils? So we cannot study everything in the world, but we can identify some areas in which we can focus on. You cannot study the whole economy because they are just huge degrees of freedom. You cannot study the movement of the crude oil in a perfect econometrics or complex mathematical model or economics model. It's just not possible. But what you can do is you can take a small slice and look at what are the other factors that has influence on the market. And that's what I've identified here. And some are short term and some are long term. So let's look at the daily pricing. So people who are on daily pricing, you want to look at CPO. Is it going to open higher? Is it going to open lower? Is this time to exit? Is this the support? Is this a resistance? These are the main things you need to look at on a day-to-day basis. Number one, related oils. Number two, end-month stock is the most important fundamental variable for CPO futures. Third, production. There are many production data, not just from Malaysian Palm Oil Board or MPOB. There is also production data from SPOMA, Southern Peninsula Palm Oil Millers Association. There is also data from Malaysian Palm Oil Association. There is also data from Bloomberg and Reuters that publishes expected data before the actual data comes out. Export, there are lots of export numbers from Malaysia that comes out. You also need to keep track of these because these are fundamentals that governs price movement. Other things you need to look at on day-to-day basis, crude oil. How did crude oil do? How did NYMEX do? How did WTI do? Did it open higher, lower, and so on? Policies, tax and levy, which are adjusted every 2 weeks in Indonesia. You need to keep an eye, but the top 4 are the most important fundamental for daily pricing people. So let's take a look at one by one of these top 4. Okay, so first thing, edible oil prices are correlated. You just have to believe these, right? Because all these oils are fighting for market share, So prices move in tandem. But you see there's a big breakdown here from July 2022. The main reason for this is because the brown line, which is the soybean oil, is increasingly used in biodiesel, while CPO, palm product, is continuously used in the edible oil market. So there is a bit of a disconnect. One is increasingly used in biodiesel, the other is used in edible oil. So that's a little bit of a breakdown there. If you look at this time series of 5 years, 2018 to August 2023. But what about the cash market? In the cash market, you can see sun, soya, and palm. Sunflower oil is pulling the other prices down. If you see from this is the chart from 2018 all the way to 2023. Okay, they are all correlated in the long term. One remark, CPO, the lowest among the oils. Sunflower is the highest here in this chart, but they're all converging here in 2023 August, where we are now September. The prices are converging. Okay. So edible, so when we look at edible, when I say edible oil prices, so I've shown you that the prices are correlated. They are not decoupled. They move in tandem. They fight for market share. One price is higher, people will shift to buying other oils. If sunflower oil is too expensive, consumers will buy palm oil, okay, and so on. So on day-to-day basis for the futures market, what are the related edible oils you need to watch? And these are the ones. I've already hyperlinked these. So if you click, it can take you directly to the delayed pricing, not live pricing. You want a live pricing? Open an account with Philip Capital, and they will give you all the access to the prices, the fundamentals, and so on. So soybean oil on CBOT, you need to watch this. How did the market close overnight? Soybean oil on Dalian Commodity Exchange, RBD palm oil on the Dalian Commodity Exchange. Other oils we take a look, but not so strongly correlated to CPO futures is the rapeseed oil on Zhengzhou Exchange. The code is 0OI, and canola on the Intercontinental Exchange, which is listed in Canadian dollars. So these are all related oils to palm, okay? And you need to keep an eye on this. So we cannot study everything, but we can study these related oils. Okay, second point I mentioned was that the correlation between prices and Malaysian in-month stocks are very, very stable. There is no breakdown so far. What I mean is that there is a very clear, consistent, inverse relationship. When stocks are low, prices are high. When stocks are high, prices are low. August 2023 end month stocks are currently at 2.1 million tons, which is at 7-month high. So no wonder prices are under pressure because stocks are building up. Just one point I want to make here. Malaysia is the second largest producer, while Indonesia is a much bigger producer, 50 million tons. Malaysia is about 20 million. But global market pays attention to Malaysian supply and demand data. Why? Because the data is reliable, it's timely, and it is accurate. Malaysian Palm Oil Board releases the data on the 10th of every month. And if you have not seen the data, you can wait for the 10th of October and you can see the data here where I put here, click here. I've already hyperlinked this. So when you get the slides, you can straight away go there and you can see how the data will be displayed. In fact, I will show you. Okay, this is the same thing, relationship between stocks and prices. So I took the CPO futures third month, averaged it, and plotted this chart. And this purple line is the change. That means I take August 2023 stocks minus August 2022 stocks, and I get this difference here. Okay, and likewise all the way. And you can see stocks in deficit, prices are rising higher, rising higher. Stocks are in surplus here, October, December, Feb, April, June. In 2023, prices are depressed. Okay, so it's a very stable, consistent, clear relationship. 8-month stocks have inverse relationship to prices. Important fundamental here. Okay, moving on to production and export. So I spoke to you about related oils, stocks, and now I want to say a little bit on production and export. So palm oil export data is released by cargo surveyors, ITS, SGS, and MSPEC. If you want to receive this data, you can send me a WhatsApp message. I can also distribute this data like I do every time when the data comes up. So this data gives you an indication of how Malaysian exports are doing for the month. Okay, And these data sometimes even comes out a day before. For example, 1 to 10. On the 9th, we have a rough indication from the cargo surveyors, hey, how the numbers are going to be. So it's all good insider insight to get before the actual data comes out. Secondly, production. As I mentioned already, MPOA and SPOMA. MPOA publishes data for production from the 1st to the 20th of the month. For example, next week we will get the data for production in Malaysia for the large plantations who are members of MPOA, which covers about 40% of the oil palm planted area in Malaysia. So they'll be releasing production 1st to the 20th of September versus 1st to the 20th of August. Okay, and we think production is going to be very high, and that's another reason why prices are coming down fast, lower quickly. So, but the actual data that you have to really look out is the industry benchmark, global benchmark data from MPOB on the 10th of every month. Before they publish the data, Reuters and Bloomberg are already polling. Polling means they're asking the people in the industry, the analysts, the planters, the traders, to get an estimate. What do you think of production? How is it going to look like? And they will publish a few days in advance so that the market have an expectation of how it's going to look like. So in addition to MPOB, you also need to pay attention to USDA world supply and demand data, which is also published about 10th of every month. But of course, it's a different timing. But MPOB is published on the 10th at 12:30 p.m. Malaysia time. So when you get the report, these are the 4 main variables to focus: production, exports, imports, in-month stocks. With these numbers, domestic consumption can easily be calculated. So how does the report look like? The report looks like this. There you go. Okay, I've put the box here. You can refer later. USDA report, you don't need to look at the whole report. You need to focus on page 15 and page 28. What does it show? It shows the USA production estimate and the projection for next year. And this is published on every month. Okay, I can talk long of this, but I will not dwell on this so much. But just this is another report to look out for. All these reports are available for free. Okay, what about pricing in 2024? So main factors for pricing, these are the ones: El Nino, production, sunflower oil, China import demand, and Indonesia biodiesel. These two I will not discuss. I just don't have time for these two, but I'll just mention a little bit on these. So we are all expecting El Nino to have a massive impact on production. Is this true? So far, there were no clear indication of increase in surface sea temperature to atmospheric. There was little response. But now, the Australian Bureau of Meteorology and the American Climate Prediction, they're both saying we are going to witness changes, dramatic changes in the atmosphere, and therefore we can expect very hot weather, lack of rainfall, even drought-like condition. If you are living in Singapore or Johor or in the west coast of Peninsula, in fact, it's been raining most of these days. It's been raining a lot, and this map shows a lot of precipitation. But there are also reports of increasing number of hotspots in Kalimantan. These are early indications that we are going to face higher than normal hot weather, lower rainfall, and even drought-like conditions. So these conditions are not appropriate or suitable for crops. So crops will suffer. What will be the impact on palm oil? So we are expecting a reduction in yields from severe El Nino condition. So this is the historical data showing you the relationship between El Nino, La Nina, and yields drawn by Mr. Ling Ah Hong, who's a very well-known, globally well-respected palm analyst and weather impact on palm production. So he thinks that we will experience 4 to 5% reduction in yields in 2024. Okay, but just remember that El Nino means hot and dry weather, like I said before. But in the North and South America, they are going to be on the opposite spectrum. They're going to receive adequate and even above average rainfall, which is favorable for soybean planting and use. So don't just think lower production, higher CPO prices. Bean oil prices could be going lower because we're going to expect good production. So this is my outlook for production for Malaysia. I'm not very optimistic for 2023. About the same, hardly changed. At the moment, production is about the same to last year. 2024 production can range from 18 to 17.5 million ton. So that's a big drop compared to this year and compared to the previous year's 2019. You can see the chart here. So production is not very good in Malaysia for the last 1, 2, 3, 4 years. Okay. Over in Indonesia, production is also not great. We expect production to be flat, unchanged in 2024. And some are even calling production to be lower than 49 million tons. So you can get an indication right now that production will suffer, yields will be lower in 2024. And this is a chart showing you a combination of production and exports. So the green is the production and the red is the exports. And the gap between the two is the black line. Okay, the black line is the gap between the two. So the higher the black line, the wider the gap is. So here you can see the gap between, in 2019, the gap between production and export was very small. So the line went down, right? But now in 2023, if you look at January to August, the difference is quite large. It's about 1.78 million tons. No wonder stocks are climbing up very high. Okay, stocks are about 2 million tons. So it's quite high. But you can also do these charts easily using MPOB numbers, which are all available for free. So what we can say about this chart is that production did not rebound very strongly compared to last year, and exports also did not recover to what we witnessed in 2020 and 2019. So export demand is not at pre-COVID levels. Okay, this one I will not talk about much about these. The only thing I'll mention is that the oil that is going to face biggest production problem this year is olive oil. I'm not so convinced of this number from USDA. I think it might be lower. Although if you see this number, 2.94 million ton production is lower than 3.31. So production is not really recovering in the olive oil market, production market. Global olive oil prices reached $8,900 this month. So that's 10 times more than palm oil. And this is a big problem because olive oil consumers do not easily shift to other oils. So although there are other oils available, sunflower seed oil, palm oil, and soybean oil, but it doesn't have the same application like olive oil. So consumers who prefer olive oil will be paying a much higher price, are already paying a very high price, and will be paying higher price for quite a long time. And this is mainly because of very poor production in Spain, which accounts for about 50% of the production, and also Tunisia, very important producer of olive oil. Okay, so sunflower. So the main reason for the rapid fall in CPO prices in the last 3 weeks, I think, is because of a strong pull on sunflower oil prices. So sunflower oil prices are coming down very rapidly. And in fact, now it's trading almost at the same level as palm oil. So when palm oil and sunflower oil trades at the same level, consumers will increasingly switch to buying sunflower oil because they have this perception that palm oil is lower quality, sunflower oil is better, and therefore the switching happens. So it's a perception, not necessarily informed, always informed by science. But that's how the market structure is. So when you look at this line, all converging, the difference between these oils is very, very narrow. If you look at the chart where I show a spike, March, April 2022, the difference is big between the blue line, sunflower oil, and the orange line, CPO, FOB Malaysia. But now they're all converged together. So price is the main fundamental here that is driving CPO futures lower day by day. So here I summarize, sunflower oil are declining sharply due to high sunflower seed stocks in Russia. So Russia has had a very bountiful crop this year, and on the resumption of trade from the Black Sea from the Ukrainian ports. So today we heard second vessel carrying grains coming up from the Black Sea. So although Russia and Ukraine did not renew the Black Sea Grain Initiative, there are vessels going in, taking goods and coming out. So the Ukrainians are defying the threats from the Russian, and they are defying the expectation that trade can only happen with the agreement. So they are doing the trades even without the agreement in place at the moment. And remember, Ukraine is harvesting sunflower crop right now. So it's a harvest season in September, October, and November. So there's a lot of crops that's coming out, and some are crushed and some are not. But this is, you just got to be a bit not too optimistic, because a lot of the ports are damaged, are going through repairs, and it will be delayed, and the full return to the market will be somewhat delayed or disrupted. So my colleague Yana in Ukraine reported that from September 2022 to August 2023, so that's a marketing year that just finished, Ukraine exported 5.6 million tons of sunflower oil, which is 25% more than in the previous season. Of course, most of these oil are exported under the Black Sea Grain Initiative, but the Grain Initiative expired in July, but looks like export was still going on. And we are reporting weekly exports increasing week by week from Ukraine. So that means there's a lot of supply coming up from the Black Sea. Okay, so I've covered edible oils, related edible oils. I've covered production. I've covered weather. But now I want to speak about export demand from Malaysia. So how is Malaysian export demand doing? Okay, this is another fundamental you need to look at. Export from Malaysia is not doing so well. You can see this chart here. Exports on year-to-date basis, that means January to August, is going sideways, like in 2021, 2022, and now 2023. We are not exporting as much like in 2019. Why is that? Which country is receiving less palm oil from Malaysia? Let's see. Okay, this is the same thing, but I'm showing you on year export change. That means I take August 2023 export minus August 2022. So it's down. And likewise, July, slightly higher, a little surplus only. But there was a big drop in exports in May. And only one big rise we have seen so far this year in March. So overall, the picture is that exports are down 1.54% this year compared to the first 8 months of last year. So the main slide is China. Malaysian exports to China, particularly for RBD palm oil, is down badly. Okay, so who has been dominating the market? Although China has been slow to come back into the market due to their lethargic economic policies and recovery, but Indonesia has been gaining market share significantly this year for RBD palm oil. Remember, China is the biggest buyer of RBD palm oil, the cooking oil in the world. So can Malaysia and Indonesia return to pre-COVID exports of 7 million tons that we saw in 2019? Can they come back to that volume? So far, the numbers do not suggest that it might be a struggle. So far, Malaysia and Indonesia have exported 4.6 million tons from January to August. So if Malaysia and Indonesia can make up the remaining 1.4 million tons, then we will be back to pre-COVID export demand for palm in China. But the question is China going to buy the 1.4 million tons from Malaysia or from Indonesia? Okay, so that's the main thing. The price difference are slightly getting wider because Indonesian taxes are relatively low, although it's about $100, it's relatively low. But Malaysia is catching up. The discount is narrowing mainly because Malaysian ringgit has depreciated quite significantly, about 6% from the start of the year against the US dollar. So weaker Malaysian ringgit means good for exports. But to see meaningful recovery, Malaysian export growth is dependent on how China domestic policies are. This is just looking at the Indonesian numbers, the same thing like I showed you, year-on-year change, but this is for Indonesia. It's a slightly better year, 2023 versus 2022, slightly better. But also remember, Indonesia is coming from a very low base year when exports were banned in May. That's why you see a large deficit here in May and June 2022. Okay, so but Indonesian exports are up 12%. That's not small. That's 1.8 million tons in the first 8 months. So 1.8 million tons is like 1 month export from Malaysia, right? So that's a big increase from the Indonesian side, despite the levy and the taxes. Okay, it's not all bad news. One bright news from Malaysian palm is that Malaysian domestic consumption is booming. Domestic numbers are very, very attractive at the moment. If you look at this chart, purple bar, which shows you domestic consumption, and you have to read the axis on the left here, is nearing 2.6 million tons, and we think it will surpass 3 million tons this year, even more than 3 million tons this year. And this is mainly driven by increased usage in biodiesel and oleochemicals, right? And if you look at the next chart, I don't have it here, but CPKO domestic demand has been increasing sharply in Malaysia this year compared to last year. Okay. And Malaysia is also on B10 biodiesel, which is not implemented nationwide, but there are signs that the consumption of biodiesel will increase, and we expect biodiesel use in Malaysia to reach about 1 billion liter this year from an estimate, 1 billion liter this year from an estimate of 950 million liters last year. Okay, so still on biodiesel. So this is Indonesia biodiesel. So Indonesia has upgraded its biodiesel mandate to B35, and this should see an uptake of 11 to 12 million tons of CPO feedstock per annum, or 1 million tons of CPO every month. So lower production because of weather, higher uptake of CPO to meet biodiesel mandate are going to keep supplies tight in 2024. Conclusion, fast declining sunflower oil prices, which I showed you, high palm oil stocks in Malaysia, which I demonstrated, and good short-term production because we are going through high crop season. August, September, and October are good production months, are depressing palm prices. But prices are poised to recover from seasonal lows of production. So after very high production, yields will have to rest. Production will go into a downturn in October, November, and December. And as I said, El Nino weather will also induce suboptimum production, both in Malaysia and Indonesia. And that means we can expect high prices from mid-October, trading between 3,700 to 3,900 per ton on CPO futures active month. But even better, prices are expected to build on that recovery into the first quarter of 2024, with the forecast of about 4,000 to 4,300 ringgit per ton next year. But these high prices will not be sustained because high prices means demand rationing, exports will be lower, customers might switch to other oils. And this we have to be very careful. We do not know when the sunflower oil price fall will come to a floor. Okay, because a continuous fall in sunflower oils means it's going to pull all the other edible oil prices down. And that's why the very first point I make at the top is that supply risk from weather and sunflower oil are the two main swing factors for pricing of CPO futures. Okay, with that, I thank you very much for your attention, and I'm very happy to take any questions.
Okay, thank you, Dr. Sathia, for the wonderful and insightful sharing. So now we will proceed with the Q&A session. So we actually already have few questions waiting here, but due to the time constraint, we'll have to pick only few questions for. So for those answers that are not in time to be answered, do not worry. You could either get in touch with our branch dealers, which the contact I will share out later, or you could message Dr. Sathia as he mentioned just now. But then Dr. Sathia, later one of the audience that indeed are asking for your contact. So see whether later on how you like to share your contact with the audience, whether on where to look for you, maybe your contacts. So now, firstly, the question is from Mr. Jong to Susan. Jong is asking on how to know what is the active month. How do we determine?
Okay, thank you, William. Hi, John, for your question. How to determine what is the active month mean? We call it the active also means the most actively traded month. You can see that CPO futures contract, we have many contract months. So that with a different contract, the month of the contract means the delivery month. So when, example, now it is the September, but the September contract month has expired. So the spot month, the contract month is nearest to expiry is the October contract month. So this is the spot month. Second month and the third month should be October, November, and December. So December is currently the contract month because it is further from the delivery month. So traders, when they want to trade and want to price in, they want to hedge, they can hedge with this contract that is not so near to the delivery month, so they can have more time to get out from the position. That's why people choose the third month as the month to trade. Yep. So I hope I've answered your question.
Okay, thank you, Susan. So maybe for Susan, we have one more question for you from Jason. So he's asking, what is the difference between the daily closing prices and the settlement price?
Okay. If you're asking this question, I believe you might observe the difference between the last traded price, which I believe is what you mean as the closing price, and the settlement price. Okay, do take note that FCPO is, if you have seen my presentation slide just now about this average 30 minutes trading pattern, we can see that a lot of traders actually come in to trade before the market close. People like to do that, the market behavior. So the last price is the last traded price. It might be 1 millisecond before the market close at 6 p.m. So we can't use the last price. It might not be the fair price for the market to refer. So there is actually a calculation. There's some average of the last minutes trading in order to get a fair settlement price for the market to do their daily closing. Yep, I hope I've answered your question.
Okay, thank you, Susan. So now moving on to Dr. Sathia. So we have question from Ken On. So he's asking, what were the primary reasons which supported the price increase so drastically in first and second quarter of 2022?
Okay. So we saw record high prices in April of 2022, and we saw prices were rising. I showed you in the chart. I think three main reasons for this. Number one is Indonesia had a very unfavorable export policies because the government was very frustrated that a lot of oil was going out of the country and causing shortage in the domestic market, particularly for people on low income. So the government was so frustrated that they imposed a complete ban on palm exports it was in May. But before that, prices were already rising very high. So that's one, export ban from Indonesia. So you're sucking out supply from the exports. There's not enough supply. Secondly, there was a very bad drought weather in Argentina, which destroyed production. Argentina produces about 46 million tons of soya beans, but they ended up producing only about 23 million tons. So that's a big difference. So because of poor weather, they lost the crops for soya bean. It's important because Argentina is the biggest exporter of soya bean oil and soya meal. Okay, Brazil is the biggest exporter of soya beans. So that's another reason. And thirdly, I think we had a very big issue in Malaysia with the laborers. So there was a big shortage of laborers in Malaysia. Country was just reopening, I think, but there's just not enough workers. So crops were lost, fresh fruit bunches were left to rot. So although there were FFBs on the tree, but there's no one to harvest. So all these created a big shortage in the first quarter and second quarter of last year, and plantations made a lot of money. I mean, you can see all their profits, revenue, sales, they all shot up. But that's very high last year. That means you compare last year very high to this year, it's all very low. So this year they're all in negative. in the first and the second quarter. So those are some reasons. Thank you for your question.
Thank you, Dr. Sathya, for your kind of expertise on this. So we have one more question to Dr. Sathya as well for this from Mr. Raymond. He's asking on why is China buying more from Indonesia instead?
Oh, why is China buying more? I think price is a very big thing. So Indonesia RBD palm oil trades about $25 to $30 cheaper than Malaysia, right? Compared to Malaysian RBD palm oil FOB Malaysia PKPG. So that's one big reason they buy. And also, Indonesia is able to meet these large quantities compared to Malaysia. So Indonesia is a big producer, China is a big buyer. So you have to look at the scale also. So that's another reason. So most of the olein that's going from Malaysia to China, southern ports are from Sabah and Sarawak. So that's why it was very. So I didn't hear much from the East Malaysia POC conference, Susan, about why there's not much, increase, or why there's not much activity from the exporters there going to southern ports. So I just feel like price is the main thing. It's not shortage. I mean, there's plenty of olein in Malaysia too. There's plenty of olein in Malaysia. Yeah, that's all I can say for now.
Okay, thank you, Dr. Sathya, for the very precise reply. So maybe we have one last question, maybe open to both Susan and see if Dr. Sathya, you have anything to add on this question. So this question is from Mr. Jason. He's asking on when will Indonesia compete and maybe overtake Malaysia as the CPO future derivative market. So Susan, do you have an idea on this?
Yes, William. Yes, as what Dr. Sathya has mentioned in his presentation, Indonesia's production and everything was going very well over the years. It was increasing, while Malaysia is remaining stagnant. So if this question is about exchange, whether CPO futures, the FCPO and Malaysian CPO futures is going to be, what is the word of the question again, William? Going to be, how to say?
Let me
hold on.
Repeat the question. So the question is actually about would Indonesia compete and maybe overtake Malaysia as the CPO future derivative market? Yeah, this is the question.
Yeah, the word is there, overtake. Okay, the production, definitely it is, I mean, maybe Dr. Sathya can elaborate further later. But when it comes to the futures, the derivatives market, Dr. Sathya also mentioned that in Malaysia, we have our data is very reliable. We have a monthly there's production stocks, spot import data monthly on time, and we have a lot of institutions, agencies, they are doing the forecast. Means the data in Malaysia is highly reliable. And then FCPO is not built in one day. FCPO is not a benchmark that happens in one day. It has been in the market for 40 years. So people have been trading this contract for so many years. I wouldn't say that, wouldn't comment about whether it will be overtake or not, because what we know is this Indonesia, they're coming out with a futures contract that will want to be a benchmark. However, this will happen. This will happen because they have a very large production. But Malaysia, we also have our good points that we have built for so many years. So let's see. Yeah. Yep. To you, Dr. Sathya.
I mean, I totally agree. Anybody can launch a contract. Anybody can set up an exchange if you have the capital. What you cannot do is you cannot attract capital without work. So it's like you can dig a little lake, but the water has to come. The water has to come. There's a lot of other exchanges that have tried CPO futures, Olin futures, PKO futures. The main problem is really liquidity. You need to get liquidity. You need to get market participants. You need people to be able to say, yes, I'm going to buy this contract. I'm going to sell this contract. And therefore, there is some trade, some volatility, and some movement in the market, and people are talking and writing about it. So it's a very long game. But said that, I also want to make the point that Indonesia recognizes that, hey, we are the biggest producer, but everybody's looking at Malaysia, so they're not happy about it. And they have a much bigger domestic market too. So they're not just producers, they're also users for biodiesel, for oleochemicals, for food. So it's their inherent interest to make it work. So the word in the market is that, Susan might know better, is that the government is trying to create a program where exporters must go through the exchange. And I think ICDX may have got the contract, Indonesia Commodity Derivative Exchange. So it's not a futures contract, by the way. It's a cash market contract. So that means if you want to export, you have to go through this platform. You have to put your quantity, the price, and then the buyers must also buy from there, so that the government, the ministry, everybody knows what is the quantity sold, what is the quantity bought, what is the price, what is the specification. So with that, you start having data. With that data on price, the government intends to use that as a reference. With the reference price, then they can do all the tax and the levy and whatever, right? And they can control inflation better, right? So Indonesia gets very frustrated when cooking oil prices in the supermarket keeps going higher and higher, because it doesn't make sense. They're the biggest producer. Their prices should be lower, but the prices are going higher in the supermarkets because everybody's looking at Malaysian CPO futures. You see, that's their problem. So I think they can do it. It'll be a long-term thing, and to make it work fast, you have to make it mandatory. So basically, you force the exporters, you must do this. If you don't do this, you will not get the license. You will not get the export permit. In that case, it will work in transparency, but data is a different ballgame. If you don't have data timely, accurate, then it may not last long, I think. Okay, anyway, I've spoken too much. Thank you.
Okay, so thank you, Susan and Dr. Sathia, for your both kind of expertise. So I guess that will be the end for our Q&A section due to time constraint here. So thank you again for the informative sharing. So I will be moving on with our last few slides. So thank you, Susan and Dr. Sathia.
Thank you.
Thank you.
Okay, so if you are interested in opening an account with Phillip Capital, you may take a screenshot or scan the QR code here. So for you guys who are keen to connect with us, you can find us on these platforms. Just search for Phillip Capital Sdn Bhd on our Facebook, YouTube, Telegram, and Instagram. We post a lot of updates there regarding our events and promotions, market news, and also our latest updates. So be sure to follow us so you don't miss out on any of our updates. We also do upload our recorded videos on our YouTube channels as well. So make sure to check them out if you still want to replay back to this webinar tonight. And lastly, this is the branches to, hold on here. Okay, so this is the branches contact for you to reach out depending on where your location is. You can visit our branch or contact the nearest branch to you. You can also take a screenshot of this if you want to, and if you have any inquiries, just feel free to call any of us or drop us a message anytime. So, okay, with that, I think we have come to the end of this webinar. So we appreciate everyone's of your time, and thank you again. So we hope to see you in our future event as well. So thank you and happy weekend. Thank you, everyone.